Okay, so timeframes. So timeframes really, at the end of the day, the way it sort of works, I don't think I've explained this, the way it sort of works is, you have all these different timeframes you can view the charts from. Okay, so over a period of time. Now, if you select the 4 hour or the 30 minute, all it means is that that candle is that time frame. Okay, so if I'm on a 4 hour time frame, which is what I'm on now, it means that each candle is 4 hours. Okay, if I'm on a 30-minute time frame, it just means that each candle is 30 minutes. Okay, now we use the different time frames we use them for different things, because some things that work better on the lower time frames don't work better on the higher time frames, and vice versa. Okay, so we use different time frames for different things. Now let's work through exactly what those things are. So I made a list up here for you guys. So basically, these are your time frames. You got your daily, your 4 hour, your 1 hour, your 15, your 5. Now, the most important thing to notice is that everything on all time frames need to look at the same picture. So what I mean by that is, if the daily is bearish, so we're downtrending. If the 4 hour is, at a level of resistance where we can catch a break and retest from, where we can sell it from, and the 1 hour is showing us that there's a double top at that level, and the 15-minute is showing us a price consolidating at the level, and the 5 minutes is showing us that there's a break and retest of the level as an entry. That's what a good trade looks like. And that's what you call confluence. Okay, so confluence before we spoke about as having, more reason to take a trade. But there's also confluence in your time frames, making everything look at the same picture. The second everything lines up and say, okay, everything's looking for a sell, we can actually take the position from there. Okay, so first things first, daily time frame. So on a daily time frame, there's two things we look at. Okay, so we look at the trend and we look at candlestick formation. Okay, so obviously we have an uptrend up here. Okay, maybe a bit of a consolidation here, and then we're starting to begin a downtrend. So not only is price moving below the moving averages, okay, which is average where price has been, we can see that there's clear lower highs and lower lows being made. All right. Now it's very simple. You don't have to zoom too much out, because the daily time frame isn't what we're trading. We're just looking at it for an overall idea. So if we're in this situation, well, we can see that okay, price is clearly downtrending. Okay, and also the candlestick formation is it sort of works on a 4 hour time frame. So let's go back to that. All right. So 4 hour time frame is for confluences. Okay, and area of value. So we're just trying to find a good area in the market where we can take a position from. And if I'm trying to sell, I need a good area in the market where I can sell. So I don't know if we used this example for the last one, but we're going to use this one now. So this is a strong resistance level. At a key support. At a key trend line, after a break and retest has been formed. Respecting the moving averages as at a possible Fibonacci. Okay. Now, if I go to my daily time frame, what I can see at that area of value, I can see that, okay, at these three candles here, prices sort of moved up, getting rejected, a bit of indecision and a bit of, strong rejection to the downside. And, the formation of this candle right here is, really, really bearish, which is what I want. So if I'm trying to sell, I need to sell when everyone's doing it. The daily time frame is telling me that, okay, there's rejection at this level, and that's important because it needs a flow of the daily time frame. So not only does the daily time frame show you the trend, it also tells you, well, you need to use it to have a look at what the candlesticks are doing. So the candlestick patterns, is they're showing rejection to that level. That's going to be super important, okay? And then on a 4 hour time frame, you find your confluences in the area of value. So this for me is an area of value, okay? And my confluences are all these reasons why I should take the trade. So the more reasons, the more confluences, the better. Okay. Sorry, on a 4 hour time frame like that. Okay. The 1 hour time frame is used for behavior. I'm going to bring this down a bit. So 1 hour time frame is used for behavior. Okay. And what I mean by behavior. So you jump into 1 hour, you say, okay, price is at this level. What is it? What does the market look like? Okay. Do we look like we're trending, look like consolidating, look like we're going to break out of it? What does it look like? Well, we spoke about having, the double top or the triple top. And we spoke about having a head and shoulders pattern. This is a head and shoulders pattern right here. Okay. Now what it's telling you is that price has made a move up. Okay. Higher lows and higher highs. The second it came to this little area of value, we saw that it created its first lower high. Okay. So the high was lower than the previous one. Now this is a head and shoulders pattern. I can actually draw it for you. It looks something like this. Okay. Now, not everything has to have a pattern to it, but it just tells you the story of the market. You know, look for a double top, look for a triple top, look for a head and shoulders pattern on the 1 hour time frame. They're the most effective at that key level, at that key area of value. And it's going to really be a good reversal signal that is going to tell you that price is failing to break out of this area. Okay, so 1 hour time frame, all for behavior. You can even look at candlesticks, but don't worry about too much on the candlesticks. You know, candlesticks is important on every single time frame, but the 1 hour is really working out what is price doing, and what's the relationship between the buyers and sellers. All right, then we go to a 50-minute time frame. Now, a 50-minute time frame is, you know, it's messy. My charts are messy right now, so I apologize for that. Let's delete a few things to make it simple. So, 50-minute time frame, what we have to do is work out, okay, where is price consolidating at? So I can clearly see that, you know, we're consolidating from this level here, and this zone up here is my 4 hour zone. So I want to leave that on the screen because that's showing me the bigger picture from the smaller time frame. So we're consolidating from this zone, and, you know, we're sort of consolidating from this level here. Okay, so in order to find a good entry, we use our 50-minute time frame to work out our support and resistance levels. Then we jump on a 5-minute time frame, and we say, okay, we're looking for a break and retest of that 15-minute consolidation of that 15-minute support and resistance level to the downside. And the second price does that break and retest, our entry needs to be at this break and retest level. And that's how you sort of, this is what you call top-down analysis. So you start from the top of a chart. Okay, so you start from the time frame at the top, the daily, and you work your way down to the 4 hour, 1 hour, you know, 15, 5, and you sort of make sure they all look good, use them all together to really give you an idea of what's going on in the market. Not only is that confluence, but that's what we call top-down analysis, and that's what you need to do on all your pairs. So you need to start all on the 4 hour time frame, try to find a good area of value, and then work from the daily all the way down, ensuring that everything makes sense, everything looks good, and everything follows a plan that I've been showing you guys throughout this course.